We would now like to invite Mr. Chokkalingam to share his views on the creation and destruction of wealth taking place.
Thank you. Good afternoon, ladies and gentlemen. My predecessor tried to wake you up. Rather, I will try to get you good sleep. So I'll start with some stories. I promise you I will not give you a lot of numbers. This is a joke I read in Reader's Digest about 22 years back. There's a mullaji who goes to a restaurant. Unlike us, he wears very simple dress. So by looking at his dress, the waiter doesn't give proper service. Still, mullaji gives him hefty tips. After a long gap, mullaji goes to same restaurant, same kind of simple dress and humble looking. But this time he gets phenomenal service from the same waiter. However, mullaji doesn't pay any tip. So waiter becomes restless. He reminds Mullaji, I am sure you have forgotten. Mullaji says, I am sorry, I haven't forgotten. For today's service only I paid you that day. Now, I had a similar stories in between. As I said, after heavy lunch, I'll complete the stories first. When I was doing my studies in Bangalore in 80s, there was a friend, close friend, who used to come to my hostel and used to be drunk every day. So one day I would ask him, why are you drunk? He was into edible oil business, wholesale business, very highly fluctuating business like stock market. So he would say that, Chokka, don't question me today. The business was very bad. I said, okay. He was depressed, and the next day again he would come to my hostel and he would be drunk. I would ask him the same question. Chokka, again today you spare me. The phenomenal service business today I had. I just wanted to enjoy it. This is another good example. I will relate to the stock market at a later stage. Once I fail you to get you good sleep. I attended a AGM in early 90s. By the way, this is my 28th year of experience. I spent about 21 years in equity. I'm very passionate about it. So in mid-90s, I attended one AGM, one of the most premier places in Chennai. So there was a chairman of a resort company. He came to the AGM hall like Rajinikanth, typical, the right side about 7 executives like me wearing suits, and the left side another 7 executives, all came in a foreign car. He mentioned that he has grown at 100% last 3 years, and he would continue to grow at 100% next 10 years. So a lot of people clapped, and I had a young student who was getting trained by me. So he also clapped, and then I gave him a staring look. So he got the message, very brilliant boy. He said, the whole audience, all are clapping and you are staring at me, what? I understood something wrong, what is it? I said, it's a service company. The revenue base is 330 crore. You just compound it 100% for next 10 years. It becomes, at that time, 20% of India's GDP. That time, Reliance share in the GDP was 100%. What I'm trying to communicate is that, again, I'm not banking on numbers, I'm banking on my learning, which I dedicate to. This is not on a jovial note, it's on a serious note. I dedicate to 2 middle-class investors who were taking a psychiatric treatment. After one fellow started taking treatment after dot-com theme played out in the stock market in 2000, another middle-class investor who lost his wealth in the post-reality boom. So I dedicate my learning to those 2 guys who have become a serious psychiatric patient, thanks to this Mullaji's joke, which played out in the market again and again and again. What I am trying to communicate is that there is always a dichotomy between fundamentals and stock market. Please, young people, if you start building on these premises, probably you can see a lot of success. There's always a dichotomy between the market and fundamentals. The price earning, the guys like us who sell the assets, to be on a very frank note, what we sell in the stock market, we don't sell anything in physical. Even the physical shares are gone. It's all dematted now. So we sell you intangible assets. So if my call is totally wrong, you can't even sell your physical shares to old paper vendor and get some money. So what matters is the P, price to earning, the multiple, which is a dynamic concept. Now, what I'm trying to say is that P always got two components in it. The one is a normalized P, the other one is a perception-driven P, how the Mullaji created the perception for the future. In stock market, this perception-driven P is played out again and again. So if you can understand, you can mitigate the risk, probably for your own investments or for your future employer. How it is played out? Horizontal line, we have the time. Vertical line, we have the market cap. It's always played out in the bell curve. The wealth is created. And there are some stocks like Infosys, which create wealth and stay at the top end. They don't lose the market cap in a significant manner. There are some stocks lack fundamentals but driven only by perception, and they lose. And there are some stocks, in the public forum, it won't be proper on my part to name the company. There's a flower company, third time successful in destroying the wealth of the investors. There is an infra company, third time it destroyed. If I am not taking much of your time, about a couple of months back, I met a very senior doctor in city. He told me, Chokka, can you give guarantee on return? I said, sorry, sir, I will not. I will give guarantee only on my honesty and hard work. He said, why? Why can't you people give? When I operate my passions, I give guarantee, minimum guarantee to my customers, patients. Why can't you? I said, there are two set of parameters, endogenous and exogenous. What are the parameters with which you deal? They are all endogenous. You know how much of BP has to be controlled, how much of sugar has to be controlled. In my case, unfortunately, the market is driven by both fundamentals and perception. BHEL, just an example, the chairman says order would be delayed by 2 weeks. But the company is sitting on order book of 150,000 crore, which will last for 4 years. But when it was flashed again and again, the stock took a hit of 6%. So what do I do if I had purchased this stock for him? So he is a man who had earned money, again put in infra company at $400, and the day when I met him, it was 110. He said, can I average it? So I said, don't average it. In financial market, you have to see return for money you invest. So this is another lesson. So what I'm trying to tell you is that you have to be very cautious in choosing the stock. It's always played in terms of bell curve, but not all of them stay in the top end of the bell curve. You have to be early entrant. This is on market. My understanding, I'm not good in PowerPoint, so kindly excuse me. The perception and fundamentals play again and again, even for the market as a whole. Let me tell you, when I took up a new assignment in 2008, I was bullish on stock market at 12,000 Sensex level. I went wrong in 4 months. The Lehman episode happened. Market became 8,000. So what you see in the first U curve, the red color, I thought at the bottom, September 2008, when Sensex was 14,000 was the right time to enter. But I was proved to be a clown, no fault of India, and market became 8,000 Sensex. So the perception driven it down. The whole P evaluation for the market in terms of, shifting the U curve itself. Why I'm saying perception is that even in 2002, when GDP growth was just 3.6%, our P ratio for the market was 14. But post Lehman, our P ratio below came as low as 9. Now, market is a beautiful place, like a blind man, 6 blind men touching the elephant and giving the own version. Two extremes are there in the stock market. If you want to create wealth, you can create in the stock market. If you want to gamble and lose, you can do that. Now, let me tell you that if Tremors are happening, earthquake is happening in the Western world or in your neighboring house. What would you do? Assume that your building is strong, but in the next building there are a lot of tremors. What is your common sense? Where should be taking the shelter? So that was a time, a lot of investors said, we are risk averse, so we want to run away from India. So they ran away from India, went back to their countries where the tremors were there. What happened? Our rupee depreciated by 24%, Sensex became 8,000, and it started quoting 9 PE. It's an opportunity. Let me tell you that some of my colleagues may not agree, but let me tell you that India is an amazing story in making. We are, unfortunately, the perception is what making a lot of damage. I am not saying that correction is not justified, but the vertical, the shifting of the PE curve itself is not justifiable. What happened subsequently? The index went to 21,000. Who made money? The Desi people who believed in India's story, who stayed invested. So the point is that the theme will be played out in the marketplace again and again. You will be surprised, in early 90s, there was a boom in aquaculture stocks. Top 20 trades, if you see those days, it would be hard to believe. 12, 13 stocks used to be from aquaculture space. Today, hardly just one stock is traded in the stock market, and that stock also trading below the face value. Then we had IT boom. The good example, Infosys. Can you believe Infosys was quoting at a 300 PE at the peak of the run? Today, same Infosys, the free cash on books has gone up by more than 20, 25 times. The business has gone up by more than 15 times. So any businessman would say that the company has done well. But today it is struggling. Today it is struggling to get even 20 PE, despite all fundamental parameters. Again, why? The Mullaji story. It was paid, it was rewarded long ago. So you don't expect. I'm sorry to say that there's a structural change in the IT space. Exports, software exports used to be a couple of thousand crores in late 80s. And today more than $65 billion. So this is what this holiday resort company chairman, when he was saying, I could not digest. When he said 10 years, I will grow 100%. How can you grow $65 billion at 30% or 100%? Impossible. So this is the beauty of arithmetics. It plays a major role in destroying your wealth or creating wealth. Similarly, realty, you would have seen in 2007. And today, there were a lot of takers when they were quoting at under 200% premium to net asset value. Today, they are available at 60% discount to net asset value. No takers. Oil drilling company, the stock which used to be traded at $80 for 10 years, can you believe it went to 15, 20,000 rupees. Today, again, it is down by 80, 90%. And now, right now, the retail consumption story is played out. There is a food company which is quoting at 82 times its net profit, 10 times its sales. I am not able to understand. So again, it will be played out. And the perception plays, in long term as well as in short term. Let me tell you that it always plays once in 3 years in terms of theme, new theme. Today, right now, as I said, it is a retail consumption theme. Again, new themes will be played out. And it plays out in the short term also. There was a paint company which was traded at 24 rupees to 45 rupees for 8 years. So people, value investors who had a passion, who accumulated, a couple of months ago, a newspaper reported that the company would be taken over by a foreign company. Can you believe the stock went to $1,000? Within 35 days, the investors have lost 70% of their money in 30 trading days. Again, it will happen. Like a flower company, infra company, again and again, it will happen. So what happens is that, like so much of importance given to Infosys by, people in reporting when the quarterly results come. But let us understand, it's a beautiful company from economic perspective, it's doing great contribution. But stock market, it's perception driven and fundamental driven. I am not undermining fundamentals. But the perception also builds on the expectations and then delivery or meeting those expectations. So which is not possible now. So, but people are not able to come out of that mindset, and the kind of importance given to a company in media coverage. The wealth creation story in the stock market is over. You can't grow beyond 15% on the base of $65 billion. So that's my point. So understand the interplay between perception and fundamentals. Let me tell you, I may be wrong, this is my strong conviction. In the last 10 years, you know that penetration of internet and the trading platform, thanks to financial technology, the software they developed. Today, every building you see in societies, you see friends saying, oh, my wife has become an expert on the stock market. I give her a few lakhs and she's making a lot of money. She does trading from house. But 7, 8 years ago, even when I wanted to buy a share, I used to chase a landline, PCO, when I am on move. And today, the dissemination of information is instantaneous. The reaction to information is also instantaneous. What happens? Last year, when North Korea took its armed force close to South Korea, when this was flashed on media at 3:13, in next 13 minutes, our stock market fell by 330 points. So, a lot of experts say that, time-wise correction, price-wise correction for the bearish phase. I don't believe in time-wise correction. The dynamics of stock market has changed. You are going to see the very short cycle we have seen in the last 3 years. Market fell from 21,000 to 8,000, 8,000 to 21,000. In a single day, market moves up by 600 points. Single day, it comes down by 600 points. We'll have to live with this volatility. And the rewards and punishment is going to be, both are going to be very sudden and sharp. So the point is that, do not invest more than 30% in the equity market in India. It's going to be highly volatile. And, always believe in one thing, that if you miss the bus, don't try to chase the bus. If you are lucky, you will get a seat. If you are unlucky, it can cost your life. And this, what we call this goalie in terms of theme, it will come again and again. In 2000 dot-com boom, they said the company is not making profits. So if you go by PE ratio, there is no profits in the denominator. So don't look at PE, look at the market cap to sales. What happens every time when the theme is played out? So new goalie would be, we people will come back to you with a new set of valuation parameter. I will say we'll say that the PE is not the relevant one. Take market cap to sales. But at the end of the day, we all sell the perception in the form of equity asset class. But again, I am not giving only the negative picture of the equity asset class. It's an amazing place to create wealth. In Indian stock market, if you see, we are back to what Sensex existed in 2007 August. After 4 years, we are back to same level. But you will be surprised, 1/5 of BSE 500 stocks have given more than 100% return. There are a lot of stocks which have given even 1000% return. So India is known for micro stories. So the only point is that you be at the early stage. I can give you a couple of examples. Phoenix Mills, it had a market cap of less than 50 crore for 3-4 years. The market cap went up to 6,500 crore. You got about 200 times return. The company called Manappuram Finance, gold loan company. It has given about 300 times return. So opportunities will come again and again. It will be played out in a thematic fashion. But always remember that you have to be an early entrant to play on the theme. Even in the market, at 8,000 Sensex, and perhaps, I may be wrong, but even now, I feel that the whole market has become a great opportunity. You can create wealth by banking on even the large cap stocks now. I believe that 16,000 Sensex is an amazing, point to enter. A lot of people are worried whether we'll go back to 2008. I'll end with this note. I'm open to questions. If you look at the 2007 July, August, September quarter, and now, you will be surprised in case you have not seen this data point. Our GDP at current price is up by 99%. Sensex level is same, but GDP is up by 99%. Our banking credit base is up by 106%. It's very important because banking sector have got a close to 1/4 weightage in the Sensex. And our corporate earnings are up by 40%. Index can go down 1,000 point, 2,000 point, but always believe in India's story. Believe that our land mass is very strong. We are not going to see any major earthquake or tremor. And don't make a mistake of running away from India and go to building where there is a lot of tremors and take the shelter. I would end with saying that, I read one famous broker's book from foreign country. He spent 35 years in the equity market. So at the end of the book, he mentions that, he says, I spent 35 years in the stock market. I have seen 7 bursts in my career. At the end of every burst, I felt the world has come to an end. But while writing this book, I realized that the world of capital market never comes to an end. So same message I carry. I firmly believe in next 3 to 4 years, I won't be surprised if FIs bring in close to $100 per annum to India. This is the only economy, along with China, which can grow above 7% among all major economies. This is the only economy which has got a lot of incremental demand. I always keep saying, wherever I give lecture to students, if you know the Digambar Jain, the religion, the philosophy, so if people, all of us believe in Digambar Jain philosophy, the delta Q, the incremental demand is 0. And growth equation for a major, any economy theoretically depends upon, apart from productivity and capital, this delta Q. So the delta Q in India is very strong, and we are not Digambar Jains. But believe me, the Japan, US, Europe, they are close to Digambar Jain. The delta Q is almost close to 0. That's why they have the problem of growth. They will suffer from 1.5% growth syndrome, for several years. And this is a place to make wealth. My only suggestion is that, go beyond all the number game and look at the insights and perceptions, how the P's are played out, price earning ratios, how the themes are played out, and be smart, make money for yourself and for your future employer or customers. Thank you.
So, the stories shared by you were both refreshing and informative. We thank you for alerting us about the role perception plays in the market and how we can gain or get destroyed by it.